You probably heard it before. If you want to buy a house, just stop buying lattes. Let me be clear. That's not the reason why most people feel stuck. If you've ever walked into a Target for one thing and walked out with $50 and how the heck did that happen, then you know what I'm talking about. And if you've ever felt like owning a home is this big, far away thing that people do when they're older or when they're richer or when they're more together, well then let me reassure you. Buying a house is totally doable. But it's not going to happen by simply guessing. It's going to happen by planning. And no, you don't need a 20% down payment to buy a house. That's a myth. What you do need is a plan. And that's exactly what I'm going to give you. By the end of this video, you'll have a step-by-step strategy to start saving for your first home. A real strategy. No fluff. Not vague advice. Something that you can actually take action on. Something that fits your life and timeline. So let's get started. Before you even talk about savings, we got to talk about what's already happening with your money. Because here's the truth. Most people don't have a savings problem. They have a clarity problem. They don't know what's really coming in or what's quietly leaking out. So here's where to start. Look at your bank account, not just the balance, folks. Go back through the last 60 to 90 days. Take a breath while you do this. This isn't about judgment. This is about awareness. You want to understand what you're earning each month. That includes your regular paychecks, maybe a side hustle, or anything consistent. Then take a look at what's coming out. Not just the big stuff like rent or your car payment, but all of it. The food delivery, the streaming subscriptions, that one app that's charging you every month even though you can't remember what it does. And finally, get honest about what's optional. What could go? What could be dialed back just a little bit? It's not about cutting everything you enjoy. Let me say it again. It's not about cutting everything you enjoy. It's about seeing where you're spending on autopilot without thinking. Because the moment you see it clearly is the moment you can actually start making money moves. Clarity is power. Now let's turn that clarity into a game plan. Let's talk about budgeting. But before you roll your eyes, hear me out for a second. Budgeting doesn't mean cutting everything fun out of your life. It doesn't mean guilt tripping yourself into an occasional night out or that weekly treat yourself moment. This isn't about a punishment. It's about intention. Think of your money in categories. You have your fixed expenses, the stuff that doesn't change very much. Your rent, your phone bill, your car payment. Then you have your variable expenses, things like groceries, gas, and yes, that fun stuff. Then there's discretionary spending. This is where things get very interesting. It is the extra layer, the subscription you forgot to cancel, the things you buy when you're bored, and the online carts that somehow always end up to fill themselves. That's the area where you can find real opportunity. Not by eliminating everything, but by adjusting just enough to reroute some of that money into what I call your home fund. And here's a trick. Automate it. Don't rely on willpower. Set it up so that the money moves out of your checking account and into your home savings account the same day you get paid. Make it a non-negotiable. Because once you treat your savings like your rent, something that just has to happen, It stops being a struggle and starts becoming a habit. The budget isn't the enemy. Your budget is your GPS. It's what keeps you on track, even when life throws you that distraction your way. Now let's talk about one of the most misunderstood and the most important of the whole process, your credit score. This is where a lot of people make the mistake of thinking, I've already checked my credit and it's good. But here's what most people don't realize. The score you see on your banking app, the number that pops up on those free credit websites, that's the number your mortgage lender will use. Mortgage lenders pull a completely different version of your credit score. It's called the mortgage model, and it operates differently than the other ones you're used to seeing. Here's what this means. You could see a 720 on your phone, but when I pull your credit, when I pull a mortgage model, your mortgage score, it could be 660. This is not just a vanity issue. That could mean tens of thousands of dollars more or less over the life of your loan. And I want to be on the right side of the equation. So let's break it down. There are 5 components that make up your mortgage credit score. The biggest one is your payment history. That makes up 35% of your score. Right behind that is your credit utilization. How much you owe compared to how much credit you have available. That's another 30%. So right there, 65% of your credit score is based on just 2 things. Whether you pay on time and how much of your credit is available that you're using. That's why I always say pay early if you can and keep your balances low, ideally below 25% of your total available credit. The other 3 components, length of credit, history, types of credit, new credit, inquiries. Now listen, they matter too, but start with the big 2. And here's a tip that might surprise you. Do not open new accounts. If you're getting close to buying, and don't close older ones either. That can actually hurt you more than it helps you. Now, if you're thinking, okay, Kevin Martini, but I'm not ready to buy for another year or 2. This is exactly the perfect time to start. The earlier you begin working on your credit, the more time you have to optimize it. That's why I always say it's never too early to connect with a mortgage strategist. Now, I'm not just a mortgage strategist or a mortgage broker. I'm a certified mortgage advisor. And that means I don't sell loans. I build plans. And I work with people every day, people just like you, to help you map out a clear path from where you are today to where you want to be in the future. My approach is fiduciary, which means I only give advice that's in your best interest. If you want clarity, if you want a real plan without judgment, then give me a call. My number is 919-238-4934. Now that you got a better handle on your money and your credit, it's time to answer the question that everybody wants to know. How much do you actually need to save? This is where we bust one of the biggest myths in real estate. The idea that you need to save 20% of the down payment to buy a home. You do not. Not even close. There are loan programs available with the Martini Mortgage Group where you can put as little as 3% down. In some cases, 0%. That's not a typo. 0. Let's do the math. 3% down on a $300,000 house is $9,000. 5% down on a $300,000 house, that's $15,000. 20% on a $300,000 house, that jumps to $60,000. And yes, the more you put down, the lower your mortgage payment is. But sometimes, especially for first-time home buyers. It is smarter to preserve your cash, to keep it in your emergency fund intact, to avoid draining your savings just to hit some arbitrary number. Saving for a home is all about balance. It's about what makes sense for your financial life, not anyone else's. Now that we covered your down payment, let's not forget about everything else that comes into buying a home, because the costs don't stop at the front door. Here's what a lot of first-time home buyers don't expect: the hidden cost. I'm talking about closing costs, inspections, moving expenses, and even the post-move surprises like garbage cans, water hoses, repairs, and updates. Just buying a lawnmower for the first time is something which is unique. Closing costs typically run 2 to 5% of the loan amount. Now, that includes things like the appraisal fee, the attorney fee, title insurance, and more. Even if you're doing a zero down loan, you'll still need to be prepared for those extras. Moving a loan can cost hundreds of dollars, even if you're doing it yourself. Renting a truck, boxes, gas, maybe a bribe in the form of a pizza for your friends who help you move. Then there's the maintenance, repairs, the things that landlords used to handle. Now they're on you. But here's the truth. Those costs, they're already baked into your rent. You just don't see them. And your landlord, they're not eating those costs out of the goodness of their heart. They're charging you rent to cover them and to make a profit. So, yes, owning a home comes with responsibilities, but it also comes with control, stability, and long-term financial gain. The key is planning for these costs ahead of time, creating a second savings bucket for the extras. It doesn't have to be massive, but it should be there. Okay, so now let's go ahead and talk about something that can make savings for the down payment way easier without even thinking about it. Automation. This is the secret sauce most people overlook. Automate everything. Set a recurring transfer from your checking account to your savings account every payday. And here's a little trick I love. Use a different bank for your savings. One that's not linked to your debit card. Make it just a little inconvenient to access. Out of sight, out of mind. Also, name your savings account something meaningful like My First Home or Goodbye Rent. I know it sounds kind of silly, doesn't it? But it works. Every time you log into it and you see it, you'll remember what you're working towards. Because the truth is, most people don't fail at saving because they're irresponsible. They fail because they rely on memory and motivation. Automation removes that frictions. A small, consistent move, they add up faster than you think. Still worried about missing out on life while you're saving? Let's talk about how to cut costs without cutting joy. Saving for a home doesn't mean putting your life on hold. It just means being a little bit more intentional. Swap out takeouts once or twice a week for a meal prep. Cancel the subscription you forgot you had. Call your car insurance company and ask if you can get a lower premium. You'd be surprised what you can negotiate. The goal here isn't to strip your life of fun. The goal is to prioritize the kind of fun that matters the most, like owning a place and having a backyard barbecue instead of paying for overpriced cocktails in some else. Now, you don't have to figure it all out alone. And honestly, you shouldn't. The part right here is what most people skip. Education, guidance, a strategy. That's the part that's the biggest difference. You can try to DIY your way, though, let me be 100% clear. or you can reach out to get a plan tailored to your numbers, your timeline, and your life. That's what I do every day. I help first-time home buyers build a custom plan that actually works. And I'd love to help you too. No pressure, no judgment, just clarity. Let's map out your home buying strategy together. We'll talk about how much you should save, when you could realistically buy, and how to avoid the biggest mistakes I see people make every day. The dream of homeownership doesn't live in the someday. It starts with a single step. Let this be yours.